Welcome back to another video on this YouTube channel. This is going to be a full trade recap on this trade today. We had a 100% win rate today, taken on a very nice winning trade to an extremely obvious draw on liquidity, which I will be talking about. First of all, before I start getting into the video, I'm just going to give a bit of information about myself. I've been trading for over 4 years. I've been running a trading community for just under 2 years where I teach over 38,000 members that are in the community to become a profitable trader. As well as that, I have just released my first ever mentorship. Well, released my second mentorship, the second version of it, the best version that I've ever released. So if you do want a one-on-one approach to learning how to trade, the links are in my bio. You do not want to miss out, especially if you are a serious trader, okay? So now let's actually talk about the markets today. And in my opinion, today we had an easy draw on liquidity on the higher time frames, and all you had to do today to become to have a profitable day was to be patient and wait for the setup heading in the draw on liquidity that we knew had a very, very high chance of getting hit, okay? It was as simple as that. Starting off with the daily time frame, okay? Now let's talk about the daily time frame here, because of course the daily time frame is very, very important because it's ultimately what you're going to be looking for on the lower time frame. Now, a lot of people will tell you, and I also agree, you don't necessarily need to trade with a daily bias and have a very strong daily bias in a certain direction. But trust me when I'm telling you, if you do have a strong daily bias and you want price action and you have heavy conviction that price action is going to go in a certain direction, it will make your trading so much easier. And this is the daily time frame we were looking at coming into the day. Well, this was the daily time frame. At around 9:30, we were trading around here and we had not swept this low yet, okay? So with this daily time frame, what you kind of notice is there's not a whole lot going on. The most important thing is that we've inversed this bullish fair value gap up here. We've swept the highs. I know that doesn't necessarily matter because we're at all-time highs, but we have swept the highs right here. We are currently respecting this bullish fair value gap. Again, this is today's candle, so this candle hasn't closed yet. So we're currently respecting this candle, and we've inversed this fair value gap, and we've inversed it with string displacement. We did actually inverse this fair value gap with this candle. So you might be wondering, we've inversed it. Oh, my camera's gonna die. Let's hope my camera doesn't die. It's flashing at me. So yeah, we've inversed this fair value gap here, and we're respecting this fair value gap. So what should your bias be? Should your bias be bullish or should your bias be bearish? That is a question that many people would want to know in a situation like this. And the first thing that you can do to get a bit more confidence for your daily bias is go to the lower time frames. But before we do that, to quickly answer that question, your bias is more important about which candle has been disrespected rather than which candle is being respected. So because we've inversed this fair value gap, it gives us more of a chance of going down. Then just because we're respecting this fair value gap doesn't mean that we should come up as much. Of course, just because we've inversed this bullish fair value gap does not now mean we have to come down, but an inversion of a fair value gap gives me more confidence than respecting a fair value gap. Let's say we had a bearish fair value gap and we got a bullish candle close above it, then I would 100% be interested in longs. But because we're only respecting this bullish fair value gap and we've disrespected this fair value gap, my higher time frame narrative is a bit lower. And if we look at the 4-hour time frame, so again, this is not the 4-hour that we started with. The 4-hour, this is the 4-hour time frame that we could see at the time. Now same again here. As you can see, we've actually inversed this 4-hour fair value gap. The reason why I'm not necessarily interested in longs 100%, sure, if we got an A+ long setup, I'm sure I would have been interested in it. But take a look, we have this extremely strong swing low draw on liquidity right here. I said it in my live stream, yesterday as well. A quick tip, I said this in my last YouTube video actually. Whenever we come so close to taking out a draw on liquidity and it's a nice draw on liquidity, most of the time we will just come down and take it. I said this in my last YouTube video as well. You can go and test that out. And as you can see, we've came very low to not just any liquidity point, a very nice internal swing low in the market. So this is a very nice draw on liquidity. So although we have inversed this on the 4-hour time frame, what is more important to me is that we've inversed all of these bullish fair value gaps with very strong displacement, leading to I am more inclined for price action to come and take out these lows, okay? I hope that makes sense. Because again, you need context with trading. Just because we inverse a fair value gap doesn't mean that price action has to go in that direction. You need to add context to when you are trading. So let's look at today. Today is Wednesday. Let's speed up this price action. And yeah, today we've had an amazing trading week so far this week as well. So again, if you want to watch me trade live every single day, then all of my links are in my bio. And at open today, it was quite a very simple day. So now we have those draws on liquidity below. We know that wants to be the target. If we did get a nice long position, I'd be open and taking that as well. But I mean, the market's kind of made our minds up. At the start, we literally just dropped. We dropped and dropped and dropped. Very strong displacement. And you might be wondering, oh Louis, we've missed a move here. And I'm sure so many of you would have randomly entered into short positions back in the day, entering into a short position, hoping to catch the whole move, and that is why people that do that are never becoming profitable. You can't just randomly enter into the markets and hope your take profit gets hit. Even if you are 100% sure about a draw on liquidity and you really want a draw on liquidity to get hit, you can't just randomly enter, okay? That's not how the markets work, and the markets will never work like that. So although this is the obvious draw on liquidity, we can't just randomly enter into the market. What we do have to do is wait for the setup. And as you can see, we come down, we've still not created a setup. We could have easily just hit that low and then we wouldn't have a trade, but luckily we did not. And what we created was this 3-minute bullish fair value gap. Why am I looking at the 3-minute? Because it's a 1 minute, it's a 2 minute, my camera's died, but it's fine, and it's a 3 minute. So we have a 1, 2, and a 3 minute fair value gap. We would enter from the 3 minute fair value gap here because it is the most obvious fair value gap. If we look at a 2 minute, as you can see, there's not a 2 minute down here, there's just a 2 minute above. The problem with the 2 minute is it's a lot worse for risk to reward. So let's mark out the 2 minute fair value gap here. If you're entering into the 2 minute for shorts, this is what your risk management would look like for that low. If you're entering up the 3 minute for the risk to reward, this is what your risk management would look like. I know it doesn't seem like a lot, but this is a lot because that can be the difference between making a few extra $100 and ultimately giving you a bit more space for your maximum stop loss. So as you can see, we clearly get a very nice displacement below this 3 minute fair value gap, as well as that the 1 and the 2 minute both did inverse at the same time. This is where you would enter into your short position. Of course, for extra context, we were respecting this bearish fair value gap, but overall, this is mainly a nice trade because the draw on liquidity is so obvious. As well to the left, we had this 4-hour bullish fair value gap, another very obvious draw. Not necessarily, this isn't as obvious, but this is just a nice draw on liquidity because most of the time, unmitigated fair value gaps will get tapped into. And then yeah, I mean, that's pretty much the trade. There's not much to it. In my opinion, because it was a 3 minute time frame, it was a bit more of a lighter entry. I would much preferred a nice 1 minute. If I got a 1 minute trade, then I definitely would have entered quite heavily into a 1 minute play like this with displacement. But sadly, we didn't get a 1 minute play. We just got this 3 minute play. A nice one, close to a 1 to 2 risk to reward, depending on where your stop loss is. And yeah, just a very simple play targeting the liquidity draw. Of course, I live shoot myself trading every single day. If you want daily uploads exactly like this and you found this useful, then please do let me know in the comments. I'll gift a one-funded account away to somebody who's made it all the way to the end. So yeah, I hope you enjoyed this video. I'll see you on my live stream tomorrow. Thank you so much for watching, and I'll see you all tomorrow. Thanks guys.